Welcome back to the Bitcoin Street Journal podcast. I'm Autumn, and I am literally buzzing with energy today because Bitcoin just did something absolutely insane.
And I'm Darren, here to tell you that October 8th, 2025 will go down in Bitcoin history as one of the most significant days ever. We've got BlackRock making waves, Deutsche Bank orange pilling, and Bitcoin demolishing all-time highs like they're nothing.
Before we dive into this absolute tsunami of bullish news, remember to visit thebitcoinstreetjournal.com and set up your free Nostr profile. The orange pill revolution is accelerating, and you need to be part of the decentralized future.
Now, let's get into the numbers because what I'm about to tell you is going to blow your mind. Bitcoin is currently sitting at $122,584. And before you say, Darren, that doesn't sound like an all-time high, let me tell you what happened in the last 24 hours.
Bitcoin smashed through $126,000, a new all-time high. The king of cryptocurrencies just proved once again why it's the only digital asset that matters.
Market cap is at $2.44 trillion. That's bigger than most countries' entire economies. And Bitcoin dominance, a beautiful 56.97%. The king maintains his throne.
While we're seeing a slight pullback today, down 1.45%, this is completely normal profit-taking after such a massive run. The 24-hour volume is sitting at $80.4 billion, which shows real institutional-grade liquidity.
The total crypto market cap hit $4.29 trillion, an all-time high. But here's the thing, Bitcoin is leading this charge, not some random altcoin casino chips.
And can we talk about what's driving this? It's not retail FOMO, it's not meme coin mania, it's institutions recognizing that Bitcoin is the hardest money ever created.
Exactly. Now let's dive into the news that's making traditional finance finally understand what we've been saying for years.
All right, buckle up because this segment is going to be packed. The institutional adoption wave isn't coming, it's already here.
Let's start with the bombshell from Deutsche Bank. They just said Bitcoin and gold may both appear on central bank balance sheets by 2030. The same institutions fighting Bitcoin are now admitting it belongs alongside gold as a reserve asset. Deutsche Bank cited declining volatility, fading skepticism, and US-led adoption as reasons why this is inevitable. We've been saying this for years.
And while we're talking about massive institutions, let's talk about BlackRock. Their Bitcoin ETF, IBIT, is now just a hair away from $100 billion in assets under management.
$100 billion. This is BlackRock's most profitable ETF ever, and it launched less than a year ago. Eric Balchunas from Bloomberg pointed out that the rest of BlackRock's top 10 ETFs took decades to build their asset bases.
And on October 8th alone, U.S. spot Bitcoin ETFs saw $1.19 billion in net inflows. That's the second highest single-day inflow since launch.
BlackRock's IBIT alone pulled in $970 million in a single day. That's not retail investors buying $100 worth. That's major institutions loading up on Bitcoin.
But wait, there's more. SpaceX, yes, Elon Musk's SpaceX, reportedly holds $1 billion worth of Bitcoin.
The company that's literally building rockets to Mars understands that the most important mission is escaping Earth's fiat monetary system.
Strategy continues their relentless accumulation. Their Bitcoin treasury is now valued at nearly $80 billion, putting them alongside Amazon, Google, and Microsoft in terms of cash reserves.
And they're ranked as the fifth largest corporate treasury among S&P 500 companies. A company built entirely on a Bitcoin standard is competing with tech giants.
Meanwhile, Robinhood is joining the S&P 500, though strategy missed out this time. The fact that crypto-forward companies are entering the most prestigious stock index shows how far we've come.
Let's rapid fire some more corporate treasury news because there's just so much happening.
BitMine now holds over 2.83 million ETH tokens with total crypto and cash holdings of $13.4 billion. Though honestly, I wish they'd just buy Bitcoin instead.
We'll roast that decision later. Kindly MD just issued $250 million in convertible debt to buy more Bitcoin for their treasury.
Orange BTC, South America's largest Bitcoin treasury company, is now live and trading on the B3 Brazilian Stock Exchange. Bitcoin adoption is going global.
And Anthony Pompliano's ProCap BTC just appointed a former U.S. House Financial Services Committee chair as senior advisor. This is serious institutional infrastructure being built.
The corporate world is waking up to what Michael Saylor figured out years ago. Bitcoin is the best treasury reserve asset in human history.
The regulatory landscape is shifting faster than ever, and it's overwhelmingly Bitcoin positive.
The SEC, under Chair Atkins, has completely scrapped Gary Gensler's crypto enforcement agenda. The days of regulation by enforcement are over.
Atkins is aiming to formalize an innovation exemption by the end of 2025, which would let crypto projects experiment under supervision instead of facing immediate lawsuits.
Though, with the current government shutdown, that timeline might slip to early 2026, but the important thing is the direction, towards clarity, not hostility.
The SEC has also approved a generic listing standard that will greatly accelerate the approval process for crypto ETFs. We're going to see a flood of new products.
Canary just filed S1 amendments for Litecoin and Hedera, HBAR, spot ETFs with finalized tickers and fees. Bloomberg's Eric Balchunas says this is typically the final step before launch.
Though, let's be real, do we really need ETFs for every random altcoin? Bitcoin ETFs are printing money because Bitcoin is the only cryptocurrency with true scarcity and decentralization.
Fair point, but the regulatory acceptance of crypto as a legitimate asset class is huge for Bitcoin. Rising tide lift all boats, even if most of them are leaky.
The Bank of England is reconsidering its proposed stablecoin caps after intense industry pushback. Regulators worldwide are realizing they can't stop this technology.
And get this, NASDAQ just filed with the SEC for tokenization of stocks. Traditional finance is starting to understand that blockchain settlement is the future.
Senator Lummis continues pushing for a strategic Bitcoin reserve, saying acquisition of funds can start anytime. Imagine the U.S. government hodling Bitcoin alongside gold.
The political will is there, the technology is proven, and the institutions are buying. Bitcoin is inevitable. Let's talk about the technical side because the Bitcoin network is stronger than ever.
Bitcoin exchange net flows just hit a 3-year low. Do you know what that means?
People are taking their Bitcoin off exchanges and into self-custody. Not your keys, not your Bitcoin is finally becoming mainstream wisdom.
This signals strong holder conviction and reduced selling pressure. Long-term holders are accumulating, not distributing.
Over 95% of Bitcoin's circulating supply is now in profit, with BTC above 117K. But here's the crazy part. People aren't selling.
That's because Bitcoiners understand time preference. We're not here for short-term gains. We're here because Bitcoin is the hardest money humanity has ever created.
The Bitcoin network mining difficulty is at an all-time high. The network has never been more secure.
Miners are holding more Bitcoin than they've held in months. The people closest to the protocol are bullish.
And while we're talking about network strength, let's mention that network adoption continues growing organically. No marketing campaigns needed, just real utility driving real adoption.
Okay, we have to talk about gold because something massive just happened.
Gold hit $4,000 for the first time ever, a new all-time high for the yellow metal.
And of course, the Bitcoin skeptics are out in full force saying, see, gold is the real safe haven. Bitcoin is losing the digital gold race.
Let's break down why this narrative is completely backwards. First, gold hitting $4,000 is bullish for Bitcoin.
Exactly. It proves that people are looking for alternatives to fiat currency. When central banks are printing money like crazy, both gold and Bitcoin benefit.
But here's the key difference. You can't send gold across the internet. You can't verify gold's authenticity with cryptographic proof. You can't easily divide gold into satoshis.
Bitcoin is everything gold wishes it could be. It's scarce like gold, but it's also portable, divisible, verifiable, and resistant to confiscation.
Peter Schiff is out there predicting Bitcoin will crash while gold soars, but let's remember, Bitcoin is up from $16,000 to $122,000 in just a few years. Gold went from $1,600 to $4,000.
Bitcoin is up 662%, while gold is up 150%. And Bitcoin did it in a fraction of the time with a fraction of the market cap.
The fact that both are rising proves that we're in a debasement trade. Governments are destroying the value of fiat money, and smart investors are fleeing to hard assets.
Bitcoin and gold can both succeed, but only one of them can be sent to someone in another country in 10 minutes without asking permission.
Deutsche Bank agrees with us. They're saying Bitcoin will be on central bank balance sheets by 2030 alongside gold. The debate is over.
All right, it's time for everyone's favorite segment, the altcoin roast, where we remind everyone why Bitcoin is king and everything else is just complicated.
Ethereum is up, approaching $5,000, but it's still not at its 2021 all-time high. Bitcoin is making new all-time highs, showing the difference between a scarce asset and one with unlimited supply. And all of these Ethereum killers, Solana, Cardano, promising to be faster and cheaper, miss the point. Bitcoin's job is to be the most secure, decentralized, hardest money ever created. Fast transactions are for Lightning Network, not the base layer.
Altcoin projects try to be everything: money, smart contracts, NFTs, DeFi protocols, and end up doing nothing well. Bitcoin does one thing perfectly: be unstoppable, sound money. Speaking of which, let's talk about XRP. It's been pumping lately, and the XRP army is celebrating like they've won something. It just got flipped by BNB in market cap. While BNB has utility, what does XRP actually do?
Meanwhile, Bitcoin is quietly being adopted by those same banks as a treasury reserve asset. No permission needed, no lawsuits, no CEO making promises.
And let's not forget about all these meme coins: Dogecoin, Pepe, Bonk. It's gambling, not investing. If your investment thesis depends on a tweet, you're playing roulette. The beautiful thing about Bitcoin is its simplicity. 21 million coins, proof of work consensus, no CEO, no marketing team, no pre-mine.
While altcoin projects are having governance drama, token unlock controversies, and founder disputes, Bitcoin just keeps working, block after block, every 10 minutes for 16 years straight.
Remember, if it has a marketing budget, it's not decentralized. If it has a foundation managing the protocol, it's not truly permissionless. Bitcoin has none of these problems.
Before we wrap up, let's take a moment to understand why all these institutions are suddenly loading up on Bitcoin.
It's not just about number go up. These are sophisticated treasury managers at major corporations making calculated decisions.
First, it's about scarcity. Every publicly traded company has access to the same playbook: buy shares, issue bonds, hold cash, buy real estate.
But Bitcoin is the only asset with provable mathematical scarcity. Only 21 million will ever exist, and that cap is enforced by cryptography, not human promises.
Second, it's about inflation protection. When governments print trillions of dollars, cash becomes toxic. Your treasury is literally losing value every day.
Strategy's Bitcoin holdings appreciated by $3.9 billion in Q3 2025 alone. Show me a cash account that did that.
Third, it's about network effects. The more institutions that adopt Bitcoin, the safer it becomes for the next institution to adopt Bitcoin.
When Strategy does it, they're crazy. When MicroStrategy and Tesla do it, they're visionary. When MicroStrategy, Tesla, SpaceX, and dozens of other companies do it, it's prudent treasury management.
Fourth, it's about taking responsibility for your own monetary future. Holding dollars means trusting politicians not to debase the currency.
Holding Bitcoin means trusting mathematics, cryptography, and decentralized consensus. Which would you trust?
The institutions that are moving early are going to look like geniuses in 10 years. The ones that wait are going to be explaining to shareholders why they missed the biggest wealth transfer in history. What an incredible day for Bitcoin. Let's recap the absolute tsunami of bullish news.
Bitcoin smashed through $126,000 to new all-time highs. BlackRock's IBIT is about to hit $100 billion. ETF inflows are breaking records.
Deutsche Bank says Bitcoin will be on central bank balance sheets by 2030. SpaceX holds $1 billion in Bitcoin. Corporate treasuries are going orange.
The regulatory environment is improving. The SEC is pivoting toward clarity. The political will is building for a strategic Bitcoin reserve.
The network is stronger than ever. Holders are accumulating. Exchange balances are at 3-year lows.
And most importantly, none of this was an accident. Bitcoin was designed to be exactly what it's becoming, the global reserve asset for the digital age.
Remember to visit thebitcoinstreetjournal.com, set up your Nostr profile, start zapping sats, and join the decentralized revolution.
Study Bitcoin, understand why it works, and if you're not already, consider getting some exposure. We're still early.
Most importantly, not your keys, not your Bitcoin. Take custody of your own wealth. Be your own bank.
The 21 million Bitcoin cap doesn't care about your skepticism. The proof of work consensus doesn't care about your opinion. Bitcoin is inevitable.
Keep stacking sats, keep hodling through volatility, and keep spreading the orange bill.
Thanks for joining us on the Bitcoin Street Journal podcast. This is history being made in real time.
See you on the next block.